There are two main ways to take deductions: standard deduction and itemized deductions. The difference between the standard deduction versus itemized deductions comes down to simple math. The standard deduction lowers your income by one fixed amount. On the other hand, itemized deductions are made up of a list of eligible expenses. You can claim whichever deduction reduces your tax bill the most. You are not allowed to claim both. Standard deduction. Most taxpayers choose the standard deduction, which is a fixed amount based on your filing status. This simplifies the filing process since no itemization is required. Below is a table for 2025 standard deduction amounts. Additional considerations. If you are over 65 or blind, your standard deduction is increased. The standard deduction amounts will be adjusted for inflation each year. In addition, for tax years 2025 to 2028, taxpayers who are at least 65 will receive an additional $6,000 deduction, with a phase-out for seniors, whose modified adjusted gross income exceeds $75,000, $150,000, if filing jointly. If you are a dependent on someone else's return, a different standard deduction applies. Married filing separately. If one spouse itemizes deductions, the other must itemize as well. Both must use the same method. Here is a sample computation of the standard deduction for tax year 2025. Scenario: Bob and Mary, a married couple filing jointly with a combined modified adjusted gross income of $200,000, where only Bob is over 65 and both of them are blind. Base standard deduction for married filing jointly is $31,500. Additional amounts for age and blindness. One of them is over 65, so we add $1,600. And since both are blind, we also add $1,600 multiplied by 2 for each spouse, and that's an additional $3,200. The threshold for married seniors filing jointly is $150,000. And since their modified adjusted gross income is $200,000, the excess of $50,000 is what we will use to compute their phase-out percentage. The deduction phases out linearly over a $100,000 range, so $50,000 divided by $100,000 is 50%. Again, only Bob is over 65, so the additional $6,000 deduction only applies to him. 50% of $6,000 is $3,000. The total standard deduction is $39,300. This amount goes to line 12 of Form 1040. If your total deductible expenses exceed the standard deduction, you may benefit from itemizing your deductions individually. There are some expenses that you can deduct whether you take the standard or itemized deduction, like student loan interest, alimony payments, business use of your car, and business use of your home. These types of expenses go to Part 2 of Schedule 1 of Form 1040. Some expenses are only deductible when you itemize, like donations to charity, home mortgage interest, income, sales, real estate, and personal property taxes, and medical and dental expenses, over 7.5% of your adjusted gross income. These types of expenses are listed in Schedule A of Form 1040. Please refer to the IRS website for a comprehensive list and limitations of deductible expenses. Choosing between the standard deduction and itemizing depends on your tax situation. Keeping records of your eligible expenses and comparing both options can help you determine the most beneficial choice. Talk to us to find out which option best applies to you.